Well, it's Rhythm Desai, and now I'm Matt Orton, and guess what? He is joining us from Mumbai right here in our studio. Hello.
Good morning.
I always check people, is this not the AI version? Is the real use come down, right?
Yes,
In the AI
I'm
world, you don't
actually
know.
here.
So what brings you to India? First, welcome to India, and then what brings you to India?
Thank you. So I'm here for an investor conference with Bank of America. So as you know, we've talked a lot about India being one of my favorite regions. So there's a lot of interesting companies that we look at, invest in. And so being able to speak with management teams in person, ask a lot of the questions you need, finding new ideas. I think that's all a critical part of the investment process. And so it's wonderful to be able to do that in person and then share and talk about ideas with other investors as well.
Is it your first India trip?
So this is my second time in Mumbai.
When was the last one?
Last year.
Okay.
So I was here for the elections, which was quite an exciting time to be here.
But I bet visibly you must have seen a lot of infra development, right? I mean, that's something that you can't miss if you visit Mumbai even a year after. Any infra companies which are part of your portfolio or you're scouting for?
Absolutely. So, I mean, I think the infrastructure story is incredibly exciting. You come here and see the coastal highway. Between last year and this year, just the tunnel being open, being able to get from where we are in South Mumbai over to here this morning, it's amazing. So there's a lot of companies who are actively involved in this, but L&T is one of the names I've been looking at deeper, just given an incredibly clean balance sheet. But they have not only exposure to Indian infrastructure, but also infrastructure in the GCC, where there's a tremendous amount of capex and development and hydrocarbons, ports, all of that. So that's a really, really interesting play, I think, right now.
You know, we had Rhythm Desai from Morgan Stanley before you came in, and he's like, okay, India, everybody knows, everybody loves, but hardly anybody owns it. Is that true from a global perspective, that India is a great market to go, but in terms of commitment levels, they are minuscule?
It's true. I think there's a couple of things that are at play. India is a more challenging market to invest in as an overseas investor, so you have to be very committed to open up trading licenses. There's definitely passive ways you can play it by some of the ETFs, but there aren't as many active options. So I think as an investor, that's what makes it more exciting, because you don't have a ton of foreign flows going into these companies. There's more room for these ideas to play out. But in conversations with clients, especially as clients are finally starting to look overseas as opposed to the US being the only option as you see good returns coming from the rest of the world, I think there's a very real openness to finding new markets and other long-term growth opportunities. And so India is certainly one that I think is very exciting and is a standout relative to, say, Europe, where there's some very, very interesting opportunities there, but there isn't the same growth story. We're looking at the fourth largest economy, soon to be third largest economy in the world. That's a tremendous pool of really, really compelling investment. So I think for the long term, you have such growth with the market that I would argue is still underpenetrated from an investment perspective.
So country-wise, which is your largest exposure or region?
So the U.S. is my largest region right now. I think the earnings story continues to play out. The U.S. market continues to scale this wall of worry. It's been one of the most hated rallies I can remember. But when you look at the fundamentals are working. Corporate America is working. A lot of the long-term secular growth themes like artificial intelligence, changes to consumer habits, those are all compelling ideas where you're seeing compounding returns in the US. But you look to a market like India as well, a lot of those same themes are playing out, and they're embedded even in stories of financial companies, auto companies. So there's a lot of ways you can play this, and that's what I try and do, is find these long-term growth themes, and how does that fit into different companies around the world?
But you don't think there would be a tariff hit back, and that's going to stall the growth in US?
So tariffs are going to hit growth in some way, shape, or form, but I think a lot of that's already baked into the market. So you had that vicious sell-off after Liberation Day in the US, and I think investors realize that that is certainly, I think, the ceiling to where tariffs go. Trump was elected talking about 10, 15% tariffs. That's essentially where we've settled right now in the US. So there's going to be ups and downs as we negotiate these trade deals. But hopefully, as you start to see some of them come to the table and you get through that volatility, the market will have recalibrated by that point. And I think it will become fundamentally driven again. And we saw what that could look like during earnings season.
In general, the view is tariff impact would be felt in the second half of this calendar year. which is that's the time you will actually start seeing the effect of the tariff. Right now it's a sugar rush because everybody in a sense consumed more or loaded more ahead of tariff. Is that a real risk?
There's definitely a risk, but I think when you're looking at tariffs now, so you had this 90-day reprieve, July 9th I think is the day at which we need to have some sort of trade deals put in place. So what companies are doing now is we've kind of gone through all of the inventories they had already stocked up, but companies are taking advantage of this pause to manage and restock some inventories in advance of some of these tariffs or what might be negotiation up and down with respect to where the rates ultimately fall. But at the end of the day, the American consumer can bear some of that weight. Corporate margins are close to record highs right now. Those margins can compress a little bit to eat perhaps some of what those tariffs might look like. So I think a lot of it can be taken on by the overall economy. The economy is definitely going to slow, but I think that was a base case heading into this year. We were running at an above trend rate for a long time. So my expectation, even absent tariffs, was that we were going to see a slowdown. But the key is that we've avoided recession. I think with the walk back with respect to tariff policy, all of those left tail scenarios are off the table, and that's good enough to support growth, nominal GDP growth, that can support earnings.
But coming back to India, we do have a historical trend which in a sense has endorsed that every time when there is a little bit of problem in the developed market, and when there is weakness in the currency, which is dollar index flows, they come back into emerging markets. Will this script play out again?
So you're already seeing that. So weaker dollar has certainly benefited emerging markets, and you've seen flows move into emerging markets from the US in particular. I think there's a case for US dollar to remain weak for the rest of this year, especially as you see tariffs start to take effect. So I think you'll have the interplay of a persistently weaker dollar to help emerging markets. I think that supports the overall economy. And if you have commodity prices, especially oil, that's fairly well supplied around the rest of the world, that again provides, I think, a support for growth in a market like India. So I think there's a lot of longer term supportive tailwinds to make the more bullish case for India, absent all of the global uncertainty that might be around.
So Matt, other than infra, any other opportunities you're scouting for when it comes to India? Where is it that you have your largest exposure here sectorally?
So I think one of my longer term holdings and one of the most successful holdings we've had has been ICICI Bank. That's just been a compelling investment. I like the story with respect to growth, net interest margins, and also the private banking side as well that continues to grow. It's levered to, I think, a lot of the long-term growth themes in India. So that's been a really exciting opportunity, and I think it still looks very attractive despite the gains so far this year.
In general, the belief is that global investors do not like PSUs, government-dominated stocks. Is that true for you as well?
It is true. So that's one of the reasons I don't like China as a long-term investment, is there's still a lot of state-owned enterprises. And plus then you have on top of that the risk of what the central government's going to do. You don't have that in India, where there's not a dictator who rules the country and sets what companies can or can't do. And state-owned enterprises, I think, are just less efficient inherently. So when you look at like SBI versus an ICICI Bank, there's a clear difference with respect to where loan growth is going, asset quality, credit mix. So again, the private banking side, at least right now, is still a much more attractive place to be.
So
Makes sense.
how many days more you are in India?
So 1.5 more days.
Did you try the pav bhaji? Did you try the vada pav? Did you try the garam chai?
I have not yet, so I've got some time to do everything. At least I was able to take a tour on Sunday as I adjusted to try not to be jet lagged, and it was really incredible just to see some of the sights in Mumbai.
You've come at the right time actually. Just started about monsoon. This is like really the best time of the year when monsoons have just come in. The streets are not dirty, and they are not waterlogged, and you can actually enjoy the weather. So enjoy your
But
stay.
at least have mango.
Oh yes, I do.
Yeah.
I love mango, so I have already had some of that.
Great. Enjoy your trip. Thank you so much for your time
Thank
today,
you.
Matt. Okay.
If you like this video, then like, share and subscribe to ET Now.